Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel welcome, and once you join in, kindly say hi on the live comment section, and this will confirm that everything is working just fine. So apologies, my voice is a little bit off today. I have a small flu that is affecting my voice, but all the more, we'll try and do our best and hopefully achieve something for the day. So in the market snapshots today, we are going to cover quite a number of things. One, we'll try to understand the key economic events for the day. Second, we know that there was a huge announcement this morning coming from the Reserve Bank of Australia. Try and understand how that has been affecting the markets. And three, we'll be doing technical analysis, trying to understand the price action patterns that are currently present in the markets. And in this case, our focus will be on the major currency pairs. We'll be looking at two commodities, gold and oil, as well as major stock market indices. So once we cover this, hopefully everyone will have an understanding of the key points for the day and identify potential trading opportunities. As well, when is the next lesson EMO 50? I don't understand what you mean by EMO. Good morning, Philip, Caspar, Malombe, Kenyaga, Matilda, and Evans. Thank you for joining the session. So let's get things started. So first, let's get to the economic calendar and try to understand what are the key events for the day. So as you can see, a lot of data has already come out since morning. So first data point was the speech from FMC Kashkari. Then later on, we had average cash earnings coming in from Japan, where wage growth accelerated 1.2% year over year, which was higher than the tone of higher than previous. So household spending in Japan came in at negative 2.8%, slightly worse than the previous number, but better for the UK came in at 2.6%, which is slightly higher than expected, but also a slight slowdown from the previous number of 2.8%. So Chinese trade balance came in worse than expected at 4.5 billion. That is in terms of Chinese yuan. This is lower than the previous number, which was 159, and the expectation of 596. So this is more evidence that Chinese economy is slowing down. And in dollar-denominated terms, it was 56.5 billion, which was lower than the expectation, and of course, lower than the previous rate, which is basically the interest for Australia. I believe this was the as long as you continue with the day. So the previous interest rate basis point hike and the Reserve Bank of Australia went ahead and hiked rates by the same rate. So in this case, we have 4.35%. So we had the RBA rate statement, and then the unemployment rate coming in from Switzerland, which came in as expected as 2.1%, which is the same as the previous reading. So German industrial production came in at negative 1.4%, which was worse than expected, basically showing further weakness in German manufacturing. And this may imply that the German economy may continue swinging the recession side, especially comparing that the previous drop was negative 0.1%. So it basically means that in the month of October, the German industrial sector got worse. And this is quite concerning, especially for traders focusing on the Eurozone as well as assets within the Eurozone. So Halifax Housing Price Index in the UK showed a strong resilience at 1.1%, basically meaning that the housing market is heating up again in the UK compared to the previous drop of negative 0.3% and the expected gain of 0.2%. So this is a huge jump in a housing price index, and of course, quite a concern, especially for the Bank of England that has been looking to slow down housing. So we were expecting the the foreign currency reserves for Switzerland at 11 a.m. This is already out. So if I refresh my calendar, I should be able to see this. Hasn't been released yet. So going forward, we'll be looking at the European Producer Price Index at 1 p.m., the UK 10-year bond auction, and then two more speeches, one from FOMC member Kashkari, two FOMC member Goolsbee. Then we get trade balance for both Canada and the US at 4:30 p.m. FOMC member Barr will be speaking at 5:15 p.m. Then at 6 p.m., FOMC member Waller. Then IBD TIP economic optimism survey for the US. Then later on, the GDT price index before we look at the governing council member Koziki speaking later at 7 p.m. for Canada. So FOMC member Lohan at 9:25 p.m. Then German Buba President Nagel will be speaking at 10:30 p.m. So as we approach the end of the day, we'll be looking at consumer credit in the US at 11 p.m. So as you can see, all these is expected to be low impact news. But then the key wildcard here is the central bankers' speeches. So if you can do a very quick count, this is a 1, 2, 3, 4, 5, 6, 7. So we will be expecting 7 speeches from central bankers, majorly from the US, Canada, as well as the Eurozone. And there's that potential that one of them could say something that is important to drive the markets, and that could be the tipping point for the day. So if there's anything to observe for the day today, is the speeches from these central banking members. So as we approach Wednesday, we'll be looking at inflation expectations quarter over quarter for New Zealand at 5 a.m. tomorrow. Then we look at leading indicators in Japan, German final CPI, or basically a measure of inflation in Germany, French trade balance, Italian retail sales, Eurogroup meetings before we have a speech at 12:30 from the Bank of England Governor Andrew Bailey at 12:30. And of course, later on in the day, we'll be having a speech from Fed Chair Powell, and I think that will crown the day. So this week, a lot of focus will be on speeches from central bankers, and that's what is expected to be driving the markets as we head towards the week. So data from the Trading Economics website, you can see the key highlights for the day. So China exports fall, imports unexpectedly. Basically showing that the Chinese economy is slowing down. China exports fell 6.4% year-over-year in October, the 6th straight month of 3.3% decline, amid deteriorating due to persistent cost pressure. Meanwhile, imports unexpected, and marking the first increase since February amid signs of stockpiling and following efforts from Beijing to stimulate it. So as we all know, whenever the Chinese production, because China is one of the big demand for oil, and in that, so Australia lifts cash rates by 25 basis points to 4.35%. German industrial output disappoints. And of course, UK house prices continued to fall in October. Apologies, I lost my connection for a moment. So hopefully I'm back. So kindly confirm if you can hear me now. Hello, kindly confirm if my voice and video is back. Thank you, Caspar. Thank you for your response. So let's progress again. So as I was mentioning from the Trading Economics website, Chinese exports fall and imports unexpectedly rise. So when you see Chinese exports falling, it basically means that the Chinese economy is slowing down, mainly because the Chinese economy is largely export dependent. So China is the world manufacturing center where it basically manufactures a lot of products and distributes to the rest of the world. And if you check the major trading partners for majority of the world, you'll notice that most countries have China as their number one trading partner. So the US number one trading partner is China, Kenya's number one trading partner is China, and it's always the case for many other countries. So when you see this falling, then the demand for oil also tends to fall. So Brent sweeps a midweek China trade data. So whenever you see China trade data slowing down, it means lower demand for oil. And in so doing, we tend to associate that with lower oil prices. So Japan personal spending remains weak. And this is quite a challenge for the Bank of Japan, which has been looking to expand spending and increase income. So now that we understand that, let's get started with the technical analysis and try to understand where the markets might be headed. Awesome. Thank you guys for the responses. So on the technical analysis side, I think key highlight is something that we mentioned yesterday. So on Monday, we didn't have much of a price action in the markets. And this was because there was not much news fueling the markets. But then on Tuesday, we come up with some good volatility, especially coming from the Reserve Bank of Australia. So after the announcement of the interest rate decision, which was largely already priced in, we saw an immediate weakness in the Australian dollar against the US dollar, having topped at around this area of 0.65 to 1.2. So since then, we are seeing a core theme repeat itself, where the market was largely going down, broke the trend line, went all the way up to the major resistance, which was the beginning of the pattern. So if you follow closely, you'll notice that the beginning of this pattern, where we have this trend line, is where the market keeps going up and down. So when it breaks out here, it heads straight to the maximum resistance for the pattern. And once it gets here, finds resistance and moves in the opposite direction. So in this case, we had the market really struggling to drop from this point. But then once we got some news fueling the markets, then this led to a big sell-off. And now we are trading at 0.643. So there's still more room for downside. Of course, a key target area is these previous highs. So this area here seems like a nice target as we continue experiencing a recovering dollar or a strong dollar. So for those who joined the session yesterday, the market snapshot session yesterday, we talked a lot about what happened last week, and we identified that nothing changed fundamentally. So the dollar is still strong. US treasuries are still quite attractive for a lot of investors. So in this case, we expect the dollar to continue strengthening. And as it continues to strengthen and recover from last week's sell-off, then it creates trading opportunities for us. So in this case, as the dollar recovers against the Australian dollar, we expect some further downside, and a key target remains 0.63884. So from the forward chart, this is how it looks like. So there's still more room for downside on this chart. And this is a basis to also analyze other charts. So if you look at US equity indices, we mentioned that this top is very important to monitor. So right from the Monday's price action, if we expand this or remove this, we can see that it's almost forming a diamond. So for those who have no idea what a diamond is, I'll be trying to help you understand. So in this case, what we had here is a market that is widening here. And then on this other end, it's also widening. Then on this other end, it's thinning. And of course, on this other end, it's also thinning. And this is a core book pattern that is largely identified as a diamond. So whenever you're trading these, then you are basically looking for a breakout and most probably a potential reversal. So in this case, for the NASDAQ, my expectation is that the market now changes direction, having hit the maximum resistance. And this is along the trend line that has been holding for the better part of the year since the top that we saw in July earlier this year. So in this case, the expectation is that the NASDAQ now starts weakening, and now we could be seeing the price potentially going back downwards and erasing the gains that we had last week. So in this case, monitoring from the 1-hour chart, you can see that there is a potential trading opportunity that could emerge from this. So for the US 30 or the Dow Jones Industrial Average, we also had this happening since yesterday. So the market is really struggling to make a big fall from this high. So it might take some time to monitor these areas and look for a breakout. So we haven't had a breakout yet, so we might continue monitoring this area to identify a potential entry for a short selling position. And that is after we have evidence of sellers entering the market. So we don't have that evidence yet, so we will remain patient until that evidence is prevalent in the markets. So going forward, we also be looking at the S&P 500, which is also struggling to make a move after last week's big momentum. So from here, you can also see that we are still monitoring this area here. Nothing much is happening yet. And all we are seeing is these consolidations happening across Monday, and now we are getting into Tuesday, and perhaps even the market looking to retest that high. So we have a retest of this high also being attempted, and a retest of this high. So if the market keeps going up, we will still be patient and observe this area here. But the idea is to look for a short selling position. So as for European equity indices, for these ones, they are leading in the big sell-off. So after last week's rally, you can see the big sell-off happening on Friday. Then on Monday, some further downside. And then today, some further downside before the current hour, where we are seeing some form of strength coming into the markets. However, the overall idea is that the market has topped the resistance and now may be headed back downwards. And if you look at the Euro stock or the Euro 50 cash index, it's a similar thing. Markets began falling yesterday. Today, we expected a continuation, but the current hour is showing a big jump, which might imply that the market is looking to retest the previous high. And this is the resistance that we saw on Thursday and Friday last week. So potentially, the market could be headed back here, but the idea is to look for short selling positions, targeting even lower prices. And of course, for the UK 100, after the big rally, market pulled back downwards on Friday. Then on Monday, attempted to go up, failed. And today, it seems more of a continuation before the current hour started showing this momentum. So there's still that opportunity that equities will continue slowing down, and it takes a lot of patience to wait, and that sellers are entering the markets. So as for the dollar index, there was a big sell-off last week following the FOMC news and the decision by the Fed not to hike interest rates. But then yesterday, we started seeing signs of recovery. Our chart, you can see the strong recovery that the dollar index is mounting. So this was my key argument yesterday, that the dollar hasn't weakened yet. Even though there was a big sell-off last week, the fundamentals are still the same. The bonds are still very attractive, and the Fed is still tightening policy. And since Powell promised that he will keep rates higher for longer, then it basically builds onto the case that the dollar will continue to be strong in the markets. And this basically means the following for major currencies. One, for pound USD, after having been extremely bullish for the week, that is last week, now we are seeing the market pulling back downwards. So we saw the reversal happening yesterday. Market kept dropping. Today, a continuation of the same, and now the immediate target remains 1.22848 as a key target price level So it was the highest price that we saw 2 weeks ago. So in this case, if the market keeps going down, then the immediate target remains 1.22848. But then there's also more support around 1.22027 if the market happens to breach this area here. Then we have USD JPY. USD JPY, as I've been telling you guys, it's a bullish market unless there's intervention. So we haven't seen any form of intervention. So this was pure fundamentals last week, driving the dollar down against the Japanese yen. But then yesterday, there was a strong recovery, and today, a continuation of the same. So this bullish momentum is pretty strong, and we expect to see 150.769 price level, perhaps within the day. So from the forward chart, this is what we are looking at. So if you happen to count the candlesticks, we're basically looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 strong for our candlesticks, all closing in the green, indicating the strong bullish momentum in USD JPY currency pair. So in this case, some further upside momentum is expected. So if you haven't squeezed in a position yet, you might want to consider this. And of course, this is not investment advice. You have to do your own analysis and practice proper risk management. So Euro USD having bounced off the upper trend line, now we are seeing some form of pullback attempting to happen here. So there's still more room for upside. Remember, this is a position where a downswing could be starting, and the euro drops all the way back towards the trend line. So the idea here is to look for weakness, and I think this is evidence enough. Even on the forward chart, it's very clear that sellers are entering this market and could be headed for some more downside in Euro USD. So looking at USD CAD, here there was a big sell-off, market goes all the way down, and then now you can see the dollar making a recovery after having bottomed at this area, and now the immediate target remains this previous high here at 1.37829. So there's still more room for upside after hitting 1.37347. So in this case, I expect some further upside momentum to be playing out for the day. But then this is a key level which was acting as a resistance. So it could be acting as a resistance later on in the day. But for now, if there's a clear breach of this area, then the target remains 1.37829. So as for gold, we are seeing weakness happening here. So yesterday, I had mentioned that from these two trend lines, this area was of interest. So if the market got to this area, then we start observing for either a breakout or a bounce. So my inclination was for a bounce, where the market would potentially get here and then form a candlestick such as this one, indicating rejection of lower prices. And in that case, we could have gone for buy positions. But then from what we are observing here, is a market that closed through the support area and broke towards the lower side. And in this case, it now implies that there's more room for downside. And whenever a pattern such as this one has been broken, the key idea is usually to go for the bottom of that pattern. So this pattern started here. This is the lowest price in the pattern along the two trend lines. So in this case, the expectation is that the gold price continues to weaken and perhaps drops towards the 1953.97 price level. So this is the expectation for gold. I expect this to continue playing out for the day. So we have already checked out our USD. So we have checked the NASDAQ, we have checked the Dow Jones, the S&P 500. I think we have completed the cycle. Bitcoin is still consolidating, so more patience for Bitcoin traders. And then we look at New Zealand USD, also doing something similar, almost in 100% correlation with AUD USD. So in this case, some further downside momentum is still available, and we could be seeing the market dropping to 0.58931. Then we have USD trading against the Swiss franc. Clearly, the big sell-off last week is being neutralized. So in this case, yesterday, there was a very strong reversal, and today there seems to be some form of continuation. So the expectation is that the market now continues to recover. And in this case, as the dollar recovers against the Swiss franc, then we might be interested in looking at our previous price levels, trying to understand how they may impact the markets. So in this case, if you think about it this way, this price level being a neckline, then you could see the market forming the first shoulder here, then ahead all the way down, and the second shoulder here. So there's still a potential opportunity that the market could rally to 0.90852. So this is a real potential opportunity that the dollar could continue rallying against the Swiss franc and eventually get back to 0.90852. So that's it for the day, guys. Thank you for your time. I really appreciate this. So let's see if there's a question I may have missed. Thank you, Andy, for your kind comments, your insight, highly appreciated. Thank you. Out of gold, I think I've already covered gold and identified the potential swing. So for gold, clearly after having this channel, market failing to bounce from this area and move higher, eventually breaking the two trend lines. One was plotted within the end of the bodies, and then the other one within the end of the tails of the candlesticks. Both were broken, and now gold is headed lower, and the potential target now remains the bottom of the pattern, which is 1953.97. So thank you very much, guys. Thank you for your time. I hope you have a beautiful day. Of course, make sure to join me at 4 p.m. So remember, today is Tuesday. So on the lucky Tuesdays, you get to enjoy a double session with me. So at 4 p.m., we'll be looking at the New York market open, trying to understand how these patterns have played out then, and trying to see the continuation, and of course, any new developments in the markets will be discussed at 4 p.m. as we try and narrow down on even more opportunities. So if you haven't subscribed to the channel, make sure you subscribe so that whenever we are live, you'll get an update and you'll be able to join. So thank you, guys, and see you on the next one. Do you consider dollar index affecting those pairs? Yes, we just studied all the major pairs. So the dollar index is basically a summary of all those pairs, or basically a measure of the dollar against a basket of other currencies. So when you see the dollar index as a benchmark that shows you the strength of the dollar, then you can use that to your advantage to understand whether the dollar is strengthening or weakening, and then pair that with a weaker currency, or if the dollar is weakening, pair that with a stronger currency. And in that case, it gives you potential trading bias in the market. So that's it. See you guys on the next one.